Good morning, this is Butch Sharrock, Options University, Monday, January 7th, 2013. Access to this video is for educational and informational purposes only. Nothing contained in this video, a website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. And with that thought, let's take a look and see what happened in the first week of January. As we see and we look at our numbers, look at that, all of them in big time positive numbers. Dow up 3.8%, NASDAQ up 4.8%, S&P up 4.6%, Russell 2000, which will generally run the first month of the new year, up 5.7%. as we see all positive changes year to date. Quite a move for the year-to-date so far, as we see huge numbers on year-to-date percentage gains of 10%, 19, 16, and 18.7 respectively. Quite a move in the beginning of the year. Is the Santa Claus rally alive, and what kind of economic announcements do we have coming in this coming week? As we see on Monday, we have little or nothing. Looking at Tuesday, not a whole lot there as far as economic announcements on Tuesday. When we get to Wednesday, again, not much showing. So the beginning of the week, as we come into the new period of earnings announcements, which will be starting up next week with the beginning with Alcoa, we see not a lot happening the first 3 days of the week as far as economic announcements, as the market will have a chance to drift wherever it wants to go. Then finally on Thursday, we have jobless claims at 8:30, which take place and tell us about the prior week, and we have wholesale trade coming out at 10 o'clock. And then when we get to Friday, we have international trade at 8:30, import and export prices at 8:30, and that takes care of the week. So not a lot showing up this week as far as economic announcements to move the market. So what is it that's been moving the market? Well, can we say fiscal cliff? Can we say Santa Claus rally? And let's take a look and see what this market looked like. All right, so if we define the Santa Claus rally, we defined it as the last 5 trading days of the year plus the first 2 trading days of the new year. And if we look at this, we see that here we are on the 21st, looking at that day, and we see that we closed right around 1430. And then when we closed the last 2 days of January, we see we had huge gains and a huge Santa Claus rally. As a matter of fact, typical rally through the years is around 1.5% on the S&P and the Dow, and we see that the S&P with its Santa Claus rally, which on 12/21 closed at 1430. On the close on the 3rd, we see that it closed at 1459. So a gain of 2%. 2% out of the S&P for the Santa Claus rally, which if we can have that and if we show some good numbers for the first month of January, we may have a decent year in the market. What kind of things are working against us? Well, we have a number of things working against us. We'll have continuation of fiscal cliff problems. We'll have continuation of European problems. We have not yet seen the housing markets take off the way we'd like to see them take off. So, we've got a new president, and it's been kind of interesting, and we've fought off the fiscal cliff, and the Republic continues on in spite of what's going on in Washington, and we'd had a Santa Claus rally, so we'll see what kind of overall effect that has on us as we work our way through the year, seeing what happens with corporate earnings. What kind of things do we have to worry about? Well, corporate earnings expectations are pretty high. That may cause us some problems as we go into the coming year. All right, looking at the past week, what we saw is we had a shortened week. We had a Monday, which was an up day, and then we had off for Tuesday, which was New Year's Day, and Wednesday, Thursday, and Friday we showed continued strength as we are definitely in an up cycle. And as we're in that upcycle, let's take a look and see where we are as far as the overall cycle. All right, so looking at our trend, we are definitely in an uptrend. The 30 is above the 50, which is above the 200, and we are breaking up towards our previous highs for the year. So where are those previous highs? Well, they're up there around 1450, 1455. Which took place within the last year. All right, so now with that thought in mind, let's take a look and see where it is that we're headed for. Going back to September, we see we had a high of 1474.51. So we're definitely approaching and will most likely reach this week those high, barring any foreseen news, because remember, news overpowers everything. So heading back for those previous highs during the last 52-week period with the overall market, we are definitely in an up cycle, and we are definitely again in an uptrend. We had an interesting year in that coming into the year we were showing great strength. We stalled out as we went into April and May, pulled back, and then as we ran into the election, showed that nice election gain all the way up to that 1474 area, and then we see that we pulled back after the election. All right, and somewhat into the election, and then we had a nice little gain as we went into December, and we're kicking up as the fiscal cliff is getting solved. So that basically summarized the past year. All right, looking at the last 10 years, we see that we've got a ways to go until we get to previous highs, which were up there almost up to 1600. So we'll see whether we attack that during the coming year or not. But looking at this 10-year weekly chart, we see that we are definitely in an upcycle on the weeklies. All right, so things look rosy, things look great, but always be prepared for the downside of the market as we go into this new year. All right, looking at the Dow, we see that it followed and had a nice little Christmas rally, and isn't up at its past year's highs, but showing a similar configuration with the S&P. Nasdaq, which was one of our big gainers, look at that gap as we went into the new year, as the Nasdaq showed us that it can move above that 3,000 and pop up rather quick. Looking at the Russell 2000, where there's usually some shift into this going into the new year, we see that it was the strongest gainer of all of them. Notice 30 above the 50, above the 200, which is our bullish signals. So what is the trend at the moment? The trend is up and everything is in agreement. All right, we had some volatility in the market which came in because of the fiscal cliff, and we reached above that normal trading zone of that 25 or of that 20 area, which is our normal trading zone for the VIX between 15 and 20. And look at what happened as the cliff got sound there was a solution for the VIX. We see that we certainly had a pullback in the VIX as the fear came out of the market. It is our fear index, our investor fear gauge, and we see that it pulled back the minute that we solved some of the problems with the fiscal cliff. At least we had some kind of answer to those problems. Looking at the bonds, we see that as the market pulls up, bonds are pulling back. Bonds have had a huge run, and they have stalled out as of the last 6 months and seem to be pulling back with the overall market. The financials, which certainly had a great year last year and are moving into new highs as they were so battered, so beaten, we're expecting, with the help of the Fed, that these will continue on up. With the help of the European markets, we would expect that there's a movement to the upside in our financial markets. Oil actually kicked up a little bit. Notice it's been in a downtrend, approaching that 200-day moving average. We see whether it bounces back to the downside as we look at USO, our ETF, that gives us an indication of where oil is. In the new year, the market is bullish. All right, looking at gold pulling back. The safe haven is basically in almost at a low for the last 3 months, and we see that it has pulled back, and there's not that fear in the market, which many times will cause many people to go to the safe haven of gold. Looking at the volume, what kind of volume did we have? Well, notice the market continued on up after that gap. The SPY gives us an idea of what that gap was as we went into the first of the year. But notice what's happening here. It's getting a little thin up here. Can you say too far, too fast? Expect some kind of a pullback. Expect maybe we'll go back and try to fill that gap before we start heading higher. But we are headed for the previous highs of the year. So with that thought, that kind of reviews the year that was, the week that's coming, and what your expectations can be as we pull forward into the next year. The Santa Claus rally proved to be a positive force, and if we can show a nice positive force in January, we may have a decent year out there for all of you bulls in the overall market. For those of you that are option traders, you don't care whether the market goes up, down, or sideways. You just want to have some kind of trend that you can work with and not swim against the current. So with that thought, this is Butch Shorak, and it is Options University. And for those of you that are gold members, hang around. We'll be looking at some more stocks, looking at our stocks to watch. And for those of you that are not gold members, welcome aboard. Thank you for watching Options University, and we'll see you in a week. Butch Shorak, Monday, January 7th, 2012. And for you gold members, welcome back, and let's take a look at some of our stocks to watch. With that, let's take a look at the overall market. We see where we headed. We're currently at 1466.47, where we closed on Friday afternoon. Should continue on up to 1505. I noticed when we went through the earlier part that we're showing a decrease in volume as we've been pulling up, so you can expect that the air's getting a little thin up here. We're running out of gas. Should hit that 1475 level and may seem some kind of stall. Definitely can say that there was too far too fast, and we also know that we do have a gap sitting behind us that the market doesn't like to leave behind, and we know will be filled at some point in the near future. All right, taking a look at Amazon, we see that this is a stock that's been outperforming, showing us great strength. Certainly one of those candidates where one could buy stock. Do cover calls against it, as we see that it seems to be well protected to the downside. 30-day moving average sitting above the 50-day, above the 200, definitely giving us that bullish tendency as we move forward. Does pull back with the overall market, but never pulls back all that far. Next, taking a look at Apple. Apple, as the market was going up, was pulling back. The glory days of Apple for the moment seem to be behind, as there are rumors and whispers of having problems meeting their expectations coming into earnings, which is coming up shortly. Next, let's take a look at AutoZone. AutoZone also is a stock that certainly ran in the past, but having troubles getting out of the lower levels of its trading range. And if the market does break down, expect AutoZone to break to the downside, as this is not showing great relative strength to the overall market. Looking at the food industry, let's take a look at CMG. See, it is trying to pull back up, pull back into some of its former glory, but notice that we've still got an inversion of our moving averages, as it is not yet showing some of the characteristics that it has had last year. Next, taking a look at Google, we see Google keeps trying to respond, keeps popping up, had a pullback at earnings, and just keeps working its way back up, headed for those higher, excuse me, headed for those higher numbers as Google is ready for a breakout. If the market breaks out, expect Google to break out to some of its previous highs for the year. All right, next let's take a look at Green Mountain Coffee. Earnings mean everything, as we see that the earnings that took place showed us that Green Mountain is ready to make its way back. It's got a long way to go, but it's definitely in an uptrend. 30 above the 50, above the 200, as Green Mountain Coffee keeps picking up and heading back up. People want their coffee in the morning, and maybe they're finally getting over that news of a little bit of discrepancies as far as reporting out of Green Mountain Coffee. Taking a look at our medical field, looking at ISRG, we see that we had a bit of a pullback on news, and we see that it is now trying to work its way back up, but underperforming what it used to perform, and we see that we're ending up with an inversion where we're getting a crossover between the 50 and the 200, showing us unless some kind of news changes or unless they get this locomotive back and up and running again, ISRG does not seem to have the strength that it had. Looking at MasterCard, just keeps chugging along, all-time highs, doing it on volume. One of those stocks to own, certainly one that you could consider doing some verticals on. You consider doing diagonals on. Certainly a company that you could consider doing cover calls on, showing great strength, 30 over the 50 over the 200. MasterCard, well taken care of by QE3. All right, with that, let's take a look at McDonald's and see that it is finally battling its way back up, looking at and heading for that 3-month high. And we still have an inversion of its moving averages, but trying to chug along and show us a little bit of strength as McDonald's is trying to come back from that pullback we had about 2 quarters ago. Nike had earnings, and boy, I guess that they were happy with the earnings. It had a stock split and headed for some highs as Nike is showing relative strength, and maybe it's going to do it again. All right, looking at Priceline, we see that Priceline keeps chugging along and does move with the overall market. Great trading stock, one of the kind of stock you can use for verticals, kind of stock you can use for cash flow, as there's plenty of premium in Priceline. Next, let's look at W.W. Grainger, trying to work its way back to some of its previous levels. As we saw that last earnings showed us a little bit of weakness, pulled back down below the moving averages, and we see that it's trying to pull its way and work its way back up as one of the steady companies in our economy, providing those staples which are necessary for our economic growth. All right, that's kind of the market as it was, looking at our favorite stocks. We'll see you next week. In the meantime, we're in 2013 rather than 2012 like it says there, and I'll probably make that mistake a few more times as we work along and I'm signing dates. But the truth of the matter is it's a new year. We have a new president. We have a Democratic regime. We'll have some fighting going on between the Democrats and the Republicans. We'll see what happens. We've got more fiscal cliff, more debt to worry about, but all in all, our corporations seem to be doing fairly well. We'll see whether they've overestimated their future earnings, and it'll be another great year for us to use technical analysis to help us do better than the overall market, because when we looked at our 10-year chart, we saw that your money from 10 years ago isn't worth what it was then based upon buy and hold philosophies. So active traders, this is your feedback on the overall market on a weekly basis. Options University, Monday, January 7th, 2013. Thank you for being here.